Prepare yourself for a deep dive into the world of investing and renewable energy. As he explores the fascinating potential brought about by climate change and the decarbonization of our energy sources, with a focus on Tesla, join visionary investor and entrepreneur Chamath. Chamath outlines why he has gambled on this firm and why he thinks it has the ability to upend the utilities market. Thomas believes that Tesla has everything it needs to upend the current stock market system, including superior financial results, market leadership, investor trust, and limitless supplier shares. According to Chamath, these factors taken together will give Tesla an incredible price per share that no other tech company in history would ever be able to match. Learn the 4 essential elements that Chamath takes into account when assessing a business, including political advantage concepts and product market fit. Anyone interested in investing in Tesla for electricity in the future should watch this video. View the script written by Chamath, but make sure to use the like and subscribe buttons before we head there. During a recent interview, Chamath was questioned about his current point of interest. If I'm being really honest, I think that the biggest opportunity for economic growth of our generation is climate change, he replied. A person can easily comprehend how much energy they have generated, its economic value, and how much they have contributed back to the grid when there is no need to build speakers and inverters. Thanks to the decarbonization of sustainable energy sources such as residential solar combined with storage and software, it's among the most fascinating things. I've publicly spoken this around Tesla and have believed it for a while. This is due to the possibility that it could interfere with utilities, and Chamath is absolutely correct. For several reasons, Tesla has the ability to upend utility companies. First up, energy storage. Tesla, one of the biggest manufacturers of batteries worldwide, has created a variety of energy storage solutions that let businesses, homes, and utilities store electricity produced by renewable sources. Utilities can lessen their dependency on conventional power plants and even out the oscillations in the generation of renewable energy by employing energy storage. Number 2, electric cars. Tesla is a prominent manufacturer of EVs, and as the market for EVs expands, there may be a move away from gasoline-powered cars. This would lower the need for oil and lower the need for fossil fuel-based electricity. In order to accommodate EV charging, utilities would need to make infrastructure investments in response to the change in consumer demand. Third, solar energy. One of the biggest residential solar installers in the US, Tesla purchased SolarCity in 2016. By encouraging solar energy use, Tesla may be able to lower utility demand for electricity. Utilities would have to adjust to a new market in which consumers produce and use their own electricity instead of depending entirely on the grid. Fourth, energy management. Tesla is developing a virtual power plant that would combine energy storage devices to form a decentralized power grid, and it has created software that lets users control how much energy they use and store. Customers might be able to resell their extra electricity to utilities in this way, opening up a new source of income for both companies and households. In general, Tesla's goods and services have the ability to upend the conventional utility business by encouraging the use of renewable energy, lowering the need for fossil fuels, and opening up new sources of income for clients. Here, Chamath is exactly right. Even though the transformation will be gradual, climate change presents a once-in-a-lifetime opportunity for infrastructure and economic development, and Tesla is uniquely positioned to capitalize on these developments. Chamath continued, businesses like that fascinate me, which is why I fell in love with Amazon so quickly after it launched, and why I sold all my Facebook stock in 2014 when everyone thought I was an idiot because I presented a case for Amazon's $3 trillion market cap in front of 5,000 people at the Lincoln Center for IRA Sown and have been mocked for doing so. What the weight is at any one time is crucial. As a product could have Zippo product market fit on day 2 or great product market fit on day 200, Chamath continued, explaining what he looks for in an investment. The integrity and openness of the management group is the second aspect. Once more, this is just the weight. It can be large, low, or somewhere in between. It can also change, but it always exists regardless of the firm's size, minus 200 million euros or 2 days. The third is whether the business is working on a project that has higher prospects and is not well represented by the past, or what Chamath refers to as headwinds or tailwinds. Tesla is benefiting from headwinds for multiple reasons. Obviously, one is the switch to electric cars. Numerous nations and areas like California and Europe have established goals to gradually replace gasoline-powered cars with electric ones. This move strengthens Tesla's position as a top manufacturer of electric vehicles. Naturally, there is also a growing need for renewable energy. Concerns about air pollution and climate change are driving a global move towards renewable energy, which is expanding the market for solar and energy storage devices. Tesla is positioned to profit from this trend because to its acquisition of SolarCity and its development of energy storage solutions. Tesla is a very well-known brand as well. It is connected to sustainability and innovation. This aids in the business's ability to draw in clients and investors that value cutting-edge technology and businesses that practice environmental responsibility. Technological developments in batteries also have a significant role. Rapid advancements in battery technology could lower the cost of EVs and increase their appeal to a larger variety of consumers. Tesla has an advantage over rivals since it is one of the top businesses in battery technology. The government backs Tesla, of course. Tesla may profit from the numerous incentives that governments over the world are providing to encourage the use of EVs and renewable energy sources. For instance, the federal government of the United States has put out a proposal to significantly fund EV infrastructure and provide incentives for EV purchases. Overall, as Chamath has often noted, these challenges are fueling demand for Tesla's goods and services and setting up the business for long-term success. Therefore, Chamath's fourth consideration when making an investment in a company is political infanticide or the degree of dysfunction present. You can learn that by visiting websites such as Glassdoor and listening to the CEO's political correctness during earnings calls or in more direct settings. The sector stands to lose hundreds of billions of dollars in debt if you burn down $1 trillion worth of electricity infrastructure, resulting in numerous utility bankruptcies. The economy would be greatly impacted by this, which is why Chamath is making significant investments in businesses that might affect the utility sector. Chamath additionally stated, I think we've started to pay attention to Tesla, and we bought these convertible bonds and thought they were great risk adjusted because you weren't sure whether the shorts would win and drive the company to the ground. Convertible bonds from Tesla are an example of a hybrid instrument that blends aspects of stocks and bonds. These bonds are issued by Tesla, and for a specific price known as the conversion price, they may be exchanged for a fixed number of Tesla common shares. The convertible bonds have a maturity date and a fixed interest rate. Tesla will pay back the bondholders' principal on that day. Bondholders receive sporadic interest payments at the predefined rate in the interim. If the bond price hits the conversion price, bondholders can use the conversion option to convert their bonds into Tesla shares, potentially earning a profit if the stock price rises. Over the years, Tesla has released multiple rounds of convertible bonds with different terms and interest rates. The most significant one, which Chamath is most likely referring to here, happened in March 2021 when Tesla released $1.5 billion in convertible senior notes that were due in 2025 and had an interest rate of 0.25 per year with a conversion price equal to 1,371 pre-split shares. Investors who wish to reduce their downside risk but think that the issuing company's stock price will increase over time may find convertible bonds appealing. However, as Chamath soon discovered through unpleasant experience, investing in convertible bonds can yield lesser returns than buying the stock directly, and he probably lost millions of dollars in the process. Going back to the interview, Chamath stated, put it another way, if you're going to invest in Elon Musk's companies, are you betting on the jockey in this case, or are you betting on the business model that he has created for the company that we call Tesla? This is a really good question because ultimately the company's business model is the most important consideration when making careful, in-depth investments in technological businesses. Let's quickly review, according to Chamath Palihapitiya, this generation's biggest economic potential is related to climate change. His main area of interest is the decarbonization of renewable energy sources, particularly solar power for homes paired with storage, and the companies that have the potential to disrupt utilities like Tesla intrigue him. When assessing a company, he takes into account 4 factors: political infanticide, headwinds or tailwinds, management teams, honesty and transparency, and product market fit. What is the bottom line then? Is a knowledgeable man who doesn't hesitate to call things as he sees them. Given his strong economic acumen and ardor for renewable energy sources, it is hardly surprising that he hopes to see Tesla's stock rise to $30,000. It's obvious that this is a future-forward investment opportunity you won't want to miss given all the elements he's taken into account, including political infanticide, headwinds and tailwinds, management transparency, and product market fit. Even though it was a lot of fun, this video must end. I'll see you in the next video, but make sure to hit the like and subscribe buttons.